Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmony, and Javier and Ralph and I would like to welcome you to another episode of the Payments Trilogue. And this time we have Ville from the Nordics. I'm particularly excited to hear from him because I think we can all learn from the Nordics. They are ahead in everything. If memory serves right, they invented central bank money. The Swedish bank was the first to do that. They did the first CBDC in the world, Avant, I think it was called, in Finland. Basically, they invented mobile banking or mobiles, and with the Nokia, buy now, pay later, Klarna. They pioneered EID, e-invoicing. I've always been impressed with the Nordics. If you want to see the future, you need to look there. And Ville is a part of that community. He's all over European payments, which he can explain to us in a moment. And so welcome to you, Ville. Maybe you can tell us a little bit where you come from, and then we can dive into some of the fun topics that we've prepared with you.
Thank you for the kind introduction. Good to be here today. And you covered it quite well, actually. So I work in the Nordics. I work for Nordea Bank. With the transaction banking strategy. And in my free time, I'm a complete payment nerd. And I also have my own podcast together with my friend Paul Krugdahl. So it's called FinTech Daydreaming. And actually quite fun to be on this side of the table every now and then. And finally, of course, a disclaimer that I always have to give is that the views and opinions that I give now are my own and not necessarily those of Nordea Bank. So I think it was good to get that out of the way before the PR department calls me tomorrow.
Understood. Thank you, Ville. So maybe we can start. When we met recently, you made some rather unique, controversial, different statements, which I always find refreshing. For example, about the digital euro. You said that banks should leverage the digital euro. Many banks just hate it and don't like it. You actually say there's some advantages to it and the banks should leverage that. Could you explain that a little bit?
Yes, absolutely. And we can connect this actually back to something you mentioned earlier there, which is that the first retail central bank digital currency in the world was introduced in Finland in the 19s. It was called the Avant cash. And there's a lot of parallels on what happened and what were the learnings of that project compared to what's going on with the digital euro and what is perceived to be the future of the digital euro at the moment as well. We'll come back to that a little bit later. But so everybody knows that the digital euro is now coming. It now passed the vote in the European Parliament. It has moved on to the trilogue negotiations, and it's becoming if it wasn't a certainty before, now it is. The design of the digital euro is 90% complete. Of course, there's a lot of debate on what are going to be the final details of some critical points, including the commercial model. But now that we know as a banking sector that this is happening, we need to start looking into what are the benefits, what are the kind of silver linings that will come out of the digital euro, provided that it now happens with the scope that is being given. And I like to focus the benefit discussion in three different areas. Number one is the sovereignty angle. Of course, we will benefit from a more level playing field when it comes to the payment methods in the European Union, especially in the Eurozone in this case, and not being kind of completely controlled by the international card schemes like we are, for example, here in Finland. We are completely dependent on international card schemes for payments. We don't even have our own domestic scheme. So the digital euro will now force a European or an alternative to these card schemes. And this can be a good thing. It becomes a beneficial point for PSPs and banks because, again, you now have some leverage and negotiation power because you can always switch back to another option that you didn't have before. The points on the political benefits of having a European option, of course, are there as well, even though they're not as tangible direct business benefits for banks and PSPs. The second is the universal acceptance. We can talk about the obstacles of building acceptance networks, of course, in more detail, but on a high level, it's become almost impossible to build universal acceptance for any new payment method because that is incredibly expensive and takes a lot of investment, and the return on investment is far from certain. This has been tried many times all across the world, and really the only scalable acceptance solutions that we see today are based on the international card schemes. The digital euro will use the legal tender mandate to basically force a new method of acceptance, and they have already said that the digital euro acceptance will be opened up for private solutions as well, meaning that the European local solutions and interoperable regional solutions can benefit from the acceptance, which is now being built up due to the legal tender status of the digital euro. And finally, because we see the digital euro moving into this acceptance space, and the way it solves this kind of instant payment interoperability scheme inside the eurozone, the banks now need to start looking into, okay, how can we actually benefit from this instant infrastructure becoming like a commodity, and then moving up the value chain and look at the models of, for example, what has been done in countries where this has already happened. So we see, for example, in India, we see in Brazil, we have instant payments as a commodity and regulated free commodity in the middle. And that has forced the banks and PSPs to find new propositions and new income streams as well for the consumers, and creating better services. So with those three kind of categories, I think we are starting to build a case that this actually can be a good thing, especially considering that these investments to actually distribute the digital euro will happen no matter what, now that we are in a situation that's becoming a legal mandate.
I mean, I love your positive attitude to the digital euro, which is not found often within banks. But one could argue that your first 2 points, the sovereignty point and the universal acceptance, could have been done differently. The regulator could have mandated open banking, for example. That would also have given sovereignty and universal acceptance if they mandated that, instead of inventing a new state-driven thing. And the third one, I'm sorry, that was a bit woolly. Can you make that a bit more concrete of what the benefits for banks could be?
The benefit for banks, again, because basically the instant payment game is a race towards zero always. The movement of money between a payee and a payer, especially in retail, is again a very low margin and to be almost zero margin setup. Now that we're going to have this regulated infrastructure in place that will take it further close to zero, the banks will now need to look into the so-called value-added services, whether that's kind of different forms of consumer credit, insurance, pay later options, better initiation or acceptance protocols, for example, like we've seen in India. There's a lot of innovation that will happen. At the moment, because we are in this model where we are today, everybody's kind of happy just staying put, and are now moving forward with these new types of services. Of course, is something that will happen now, because again, we're moving, the commodity line is kind of moving up. And as far as the point on the how the acceptance could have been built, absolutely. But that's the reality that we have today. And again, we're talking about silver linings more than anything else. And the ECB has been very clear from the beginning that they want to bring public money to the digital age. And if we take that as something that we cannot prevent, then we have to look at how can we benefit this from in a good way. So obviously you can do things in many different ways, but this is where we are right now. And I think that's why we're talking about the silver linings instead.
Mm-hmm.
I very much agree on the idea of always looking at the bright side of life. And even if you are crucified, just to remind Monty Python, but that means that something went wrong, and we are willingly wishing to change a challenge into an opportunity, or doing from something bad, getting something good. You may be, I don't know, you may lose a leg and an arm in an accident or whatever, and still you should fight to monetize your impairment. But that doesn't mean that you are better off than you were before. And my question to you is, don't you think the banking industry has done a lousy job in defending their positions, in not explaining well why we didn't need a digital euro, both to the authorities and also to the public in general, and that the authorities just went ahead without any obstacle, any argument, any intellectual opposition to their willingness to build a Minotaur state. I think a digital euro is another step towards creating a Minotaur state and expanding the public sector and suffocating the private initiatives. That being said, yes, once we have the digital euro, we have to do something with it. But that doesn't mean that it is a good thing.
Yeah, no, I mean, but I completely agree. So we're looking at the state of affairs as it is right now, and what can we do? What are the things we can control? And these things that we can benefit are things we can control. I think that's a good advice for mental happiness in general, is that, you don't worry about the things you cannot really control, because otherwise you're going to be very stressed. Now, on the point, why did the banking sector fail in convincing the European political landscape and the ECB further about the viability of private solutions? This was especially when we started in the Market Advisor Group in 2021. It was one of the questions is that what is the digital euro actually solving that the private sector couldn't solve? And already in 21, the message was quite clear. I'm still not able to send money from one euro country to another euro country without knowing the IBAN number of the recipient. So I need to know which bank. I need to know the bank account number. There's no aliasing system. I cannot do that instantly unless we use the same solution. So of course, if I'm a Revolut customer, I'm a Wise customer, then I can just use the alias of that particular solution. But there is no interoperability in place, not in scale. And this was number one. The number two was, again, acceptance, and especially interoperability on the acceptance. So if I take a Finnish Siirto wallet, which is a wallet that we have here in Finland, I cannot go to Spain and pay at the Bithum point of sale in any shape or form, because they just don't work together. Then it became a debate about, okay, so if the private sector then says that, okay, we will solve all these problems. So coming up with an approach that is credible approach to, are we able to do this in time and scale that the ECB would like to see and the European Parliament would like to see. And there was a very significant effort to do this. It was actually submitted to the conversation quite clearly that this is the roadmap that we as a banking sector believe we could believe in. But ultimately, there was no trust to be able to deliver that. And I think the one of the reasons, and again, this is just a personal opinion, is that ultimately, as I kind of talked about in the beginning as well, is that there is no business case for interoperability, not in the short term. And this kind of misaligned business incentives for banks and private institutions to work on this kind of complicated industry-wide initiatives like interoperability, because they're so misaligned with these financial incentives, it becomes difficult to execute. It becomes difficult to justify these long-term investments to work together with competitors, no more or less. And even though, of course, we all know here that these are good things that need to be done and there's a long-term clear benefit there, this kind of a short-term thinking in many ways prevents this to happen in scale. It can happen regionally. I mean, we've done, for example, here in the Nordics, we have been successfully working on Nordic infrastructure many times, and we've been doing that quite successfully, especially with few occasions. But even here in the Nordics, it's sometimes difficult, let alone in a larger area like Europe. And let's not even go to a global scale here. So I think this the private sector kind of fundamental misalignment of the business incentives is big kind of preventer of this interoperability. But again, something that, of course, could be solved in the long term.
Could I ask on that, maybe the learning from that first CBDC in the world called Avant, you mentioned, is there anything that the ECB or the rest of Europe can learn from that failure? That was actually my first question. And the second one is to do with the fact that, okay, well, that was Finland, but most of the Nordics is not in the Eurozone. So how could or should the digital euro create interoperability and sovereignty for the Nordics, because it doesn't. You're just, sorry, you're not in the club.
That is true. Let me take the second question first, and then I'll come back to the Avant Cash, because that's a fun, longer story. So first of all, we know that, for example, in Sweden, the e-krona project happened already before the ECB started publicly talking about the digital euro. So the retail central bank digital currencies were already in the works here in the Nordics, especially in Sweden, a long time ago. But now the Riksbanken has said that they have put the e-krona project on pause. The reason being that they're now also monitoring what the ECB is going to do with the digital euro, and in expectation, even though they are not saying this publicly, that they will align with the ECB's digital euro architecture should that become viable for other Nordic countries, including Sweden, in the future. The other Nordic central banks have said similar things. Of course, Denmark being the most conservative, I would say, at this point in time when it comes to any kind of central bank digital currency in retail. But the reason why that's a credible theory, at least, is that already the backend infrastructure, including TIPS and Target 2, is being adopted in all the Nordic countries as a central bank infrastructure for settlement. We're even going to have cross-currency settlements soon, we think, between the Nordic countries on central bank level. So it's just a logical step forward should they want to move into retail central bank digital currency, that they would adopt a version of the digital euro as a kind of a multi-currency setup in the Nordics as well. Again, very much speculation at this point, but that's the kind of the logical trajectory that we think might happen here in the Nordics for the central bank digital currencies. The first question on the Avant Cash. So again, a fantastic project. And I do know that the ECB has been reading these case studies as well from Finland from the 90s quite extensively. So they do know what happened and why things happened. So I don't think that we need to try to make them rethink their positions based on that. But just to kind of recap, in the 90s, the Finnish central bank decided that they needed to build a card-based solution for payments in Finland. Already then, we had Magstripe-based bank cards, or we would call them debit cards today. Back then, they were called bank cards, available, not being used as much, pretty much cash-based. But the Finnish central bank thought that they need to bring a digital version of cash based on a card-based system. How they did that? They did that on a chip-based charge card, as was the very common, or actually in the 90s. The difference here was that it was actually central bank money on those chip cards. The way it worked is that you went to an ATM, you entered your ATM card, your regular ATM card, and then there's another slot built for a chip card. You put your Avant Cash chip card into that, and then you loaded the money from your bank account into that Avant card using the ATM. After that, you were able to use your Avant card completely offline. So again, it was just a chip-based payment at the point of sale, and you were able to use your prepaid balance as central bank money at the point of sale. This was, a very long, expensive rollout, as we're now expecting for the digital euro as well. Back then, there were no chip readers available at merchants. There were no chip readers at the ATMs. None of this was available. So a lot of the initial money was spent on this chip-based infrastructure to be rolled out. And then finally, once they got it rolled out, people didn't actually use it as much. The reason was that nobody wanted, or one of the biggest reasons was that nobody wanted yet another account. So people felt, why should I spend the effort to actually load money to another balance that I can only spend in certain circumstances? And by the way, if I lose the card, I also lose the money, because again, it was completely offline, legal tender status money that you had on the card. So because of this, nobody really found the reason to use it. The final pivot that they did is that the Central Bank of Finland decided that they will sell it to the private sector, which then adopted it, and then ultimately the kind of silver lining and the kind of outcome of this perceived failure of Avant Cash was that suddenly we had a chip-based payment infrastructure available in Finland. Now, of course, later on that was pivoted into EMV-based chip payments, and again, it was the first step towards that next thing ultimately. And that's the kind of the parallel that I believe will also happen to a certain extent, at least with the ECB digital euro as well. We're going to get a lot of these things that we otherwise would not have built, at least not as fast, based on this, and then we'll see where the next steps will take us. And I believe the key piece will be the acceptance piece, which again will break the duopoly that we have today with international card schemes.
I mean, that was a lovely historical lesson of the first iterations, and some things have changed, of course. The technology, we have chip cards and readers and everything now, and lots of learnings. But I think the fundamental points that you made initially is really important. Let's stop whinging that we lost the battle to prevent the digital euro, and let's make the best out of it. I think that is really the right approach. If I'd been emperor of Europe, I would have mandated ideal everywhere or open banking everywhere. I wouldn't have gone for the digital euro, but that has happened, and let's make the best out of it. So I think that's a very sensible attitude, and maybe that's how we should all start thinking about this topic. I still have to understand what these value-added services for the banks are going to be, but that's another topic. But you have many more strings to your bow. We've talked about the digital euro. You also got some original thoughts about blockchain, which you somehow think isn't quite as distributed as many people think. Maybe you could share your thoughts on that.
Sure. So a bit of background before I go down the rabbit hole of blockchain. So so I've been working with cryptocurrencies and blockchain since 2013. So that's 13 years now. So that's a lifetime in the crypto age. I started off by looking into Bitcoin as a vehicle of remittance between emerging markets and the kind of Western economies, and then pivoted on to join actually Nordea in 2017 as the head of DLT and blockchain. So I worked with 5 years with different kinds of projects with Nordea using DLT and blockchain, and then kind of grew our understanding on those topics and actually launched 2 different systems into production using blockchain technology. Later on, we've been looking into things like public blockchain stablecoins, tokenized deposits, of course, and other forms of digital currencies. But we've been doing less experimentation with blockchain now lately because of these lessons that we learned between 17 and 22 when we did a lot of experiments. So again, all that to say that we've seen a lot, we've tried a lot. Nordea Bank itself has done dozens and dozens of different prototypes and experimentations. So it's not that we haven't tried. And based on this, there's a couple of maybe interesting observations that at least I can, from my personal perspective, share here. And the first one is that the blockchain, especially in enterprise context, and to a certain extent also on the public blockchain context, is not decentralized. It is just another intermediary. The only question is that how is that intermediary configured? And in many cases, especially in the enterprise cases, they turn out to be very centralized methods of exchanging information between the parties who are part of the network. And that kind of defeats the purpose of the enterprise blockchain case altogether. I'll go to a little bit more detail on that soon. The second one is that public blockchains, also perceived to be decentralized, especially in case of Bitcoin, more often than not are not. So again, I won't go into the Bitcoin debate, even that's, in my opinion, fairly centralized, but especially the so-called programmable blockchains that are popping up everywhere now. They're typically controlled by private companies or for-profit institutions. And then again, with a handful of people really controlling what's going on in the platform development side of those blockchains. And this is the number one kind of fallacy that I always want to talk about, and especially when we talk about in context of banks, we need to really understand what are we talking about when we're talking about these quote-unquote blockchains, and what are the definitions of those, and we just cannot wave our hands and say, well, it's decentralized, so we don't have to care about it. We absolutely have to care about it.
If I understand your argument right, I mean, obviously the algorithm itself is distributed. That's the whole point, right? Distributed consensus. But the governance is actually very centralized. This whole ecosystem is controlled by very, very few players. Is that roughly right?
Correct. So again, and even with the algorithms, you have to remember that there's the it's always being developed by someone, some entity. Somebody makes a decision of design and then finally roll out an adoption. And typically, if you look at the value chain of updates to blockchains, for example, they're controlled by a very few, even individuals. And then it becomes an adopted way of working in that network quite quickly, decided by only a few actors, typically. So that's kind of the fallacy of that there's complete democracy in these blockchains is not true. And typically it's like a foundation or some kind of for-profit company that really makes the decision on how to update something on the blockchain itself. And if you are a bank working in this blockchain, then you are basically at the mercy of these centralized entities who are kind of making those technical decisions for you, including with their algorithm and the consensus. Even that can be changed. It's just code, ultimately, we have to remember.
And I think you had a concrete experience in the Nordics in the real estate area. Maybe you can share that.
Yes, of course. So again, the previous comments were mostly about the public blockchains, but now we move into the space of the enterprise blockchain and using so-called distributed ledger technology, also known as blockchain technology in some cases, as the kind of central architecture to connect the entities who are connecting to the network. The concrete example here is that we started a project in 2018 in Finland which ultimately became called DIAS. And this is a housing transaction network in Finland, which originally and still does solve the problem of making a real estate or a housing trade in Finland with a completely digital way. Before 2018, or actually 2019, the only way you could actually buy a house or an apartment in Finland is that you have to set up a physical meeting between the buyer and the seller, and you have to be in a bank to sign the documents and handle the kind of deposits and everything related to the handling of money. Now, Diaz saw this problem and said, okay, we need to make a digital version of this. And the decision, especially back in 2018, because everybody remembers it was the time when DLT hype was really kind of hitting its peak, especially in banks. And we came up with the idea that, okay, why don't we build a distributed network for these housing transactions? So all the banks joined, the real estate registry joined, the tax authority would be one, and then we would have the real estate brokers as one, and then it would be done with this distributed consensus, the deal would be go end to end in a digital way. And this is actually, long story short, exactly what we did. And the system went into production using distributed ledger technology on one of the common platforms that were very common back then. And it went into production and quite quickly became very, very popular. So today, and I don't have the latest statistics in front of me, but I think it's believed between 70 or 80% of the whole Finnish housing market is being traded on the Dias platform even today. So If you just look at those numbers, it's one of the, if not the most successful DLT project, especially driven by banks, that has ever been done. So again, fantastic success. Now here's where it gets interesting. So once it became very popular, the system basically became very strained, and there was a lot of need for a new type of development to happen on the platform or the network. And because we were using DLT, this became a bit of a problem because first of all, developing solutions or upgrading the platform was extremely complicated. You had multiple nodes, you had a very proprietary language where it was being developed on, and finding people knowing how to do that became very difficult. Also, the performance was completely, not great, because doing a distributed consensus on every transaction, of course, is very slow, and scaling that up became very expensive. Then the consensus in the Dias, between the Dias owners and banks, was that, do we actually really care about the DLT component of this? And then quite quickly the answer was that no, because you have a centralized governing entity where the rules between the parties and the processes between the parties have already been set. ultimately, the banks and the users of the platform only log into a page, and then that process is completely behind the scenes. You don't have your own keys or anything like that. It's completely used with your bank identity. And again, because of this existence of these rules and trust between the entities in that network, it became clear that it would be much more cheaper to do this in a centralized database, which is exactly what happened. The costs of running the system went down drastically. The performance went up. And again, the talent pool for developing the platform further, and therefore the speed of development of the roadmap also went on a completely much more efficient levels. So again, long story short, the DLT element was maybe necessary in the beginning, because I genuinely believe that because we used DLT in the beginning, it became almost like a permission for banks to work together. Back then, it was difficult to get the banks to the same room to agree on anything. But now that we have this DLT magic word we could use, it became a possibility for us to work together to build something like this. And I genuinely believe that it was valuable back then. But then in the long run, it became completely unnecessary. And
Ville,
yeah.
sorry, Ville, what you are saying is that the blockchain suffers of the symptoms like any other standard: network effects, switching costs, dependencies. And once you are locked in, you are even worse than with any other alternative. So it is even more acute in the blockchain rather than in a centralized system.
Absolutely, because again, it's so much more complicated to do anything, and that's why it's sometimes quite frustrating for me as well. Because many times, many of these new networks that are being developed, and they choose DLT on the merits of that it's somehow technically superior. It has so-called programmable flows and conditional this and that and atomic settlement, while forgetting that all of that can be done in a completely conventional cloud-based database stack. The only question that you're really solving there is that how do the parties participating in that network agree on rules and responsibilities together? If you can do that without the kind of blockchain element, then you're golden to just do something more simple and scalable. But even if you don't, the blockchain actually doesn't solve those questions. So you still need to solve the same questions. So sometimes it's a little bit kind of circular thinking that we see in this space, at least in my opinion.
That's nice. You're basically confirming what we recently had in an episode, like debunking all these blockchain myths. Thanks. I have, though, a question, or my next question is about open banking in the Nordics, because you were there, you had much of that well before PSD2, similar to like Germany, Austria as well. So you were in the lead, and I guess it also shows that some of the best there have been snapped up by American card schemes now with Tink and Aya. And I think even at Nordea, I think you had an API market. So you're pretty strong in this whole business all the way long. Where do you see this going, or how do you see the future of open banking in the Nordics? Is it becoming an important element, or not so much?
It's part of the canvas that we have here, and an important part as well. I want to actually find some interesting parallels to everything that we've been discussing here with regards to open banking as well. Remember when PSD2 came along and all the banks were kicking and screaming that, oh no, we don't want to do this, it's horrible, and why would we open up our APIs and all these services? And they had to do it. It was mandated, again, echoing what is happening now with the digital euro. It is the banks are basically saying that's the most horrible thing, and it very well might be, but we need to make the best out of it. That's exactly what we did in the Nordics. So Nordea was, like you mentioned, one of the first banks to adopt this thinking that, no, we're going to embrace this. This is going to be a thing that we work together with our customers to make something with the APIs. And yes, we're going to do the compliance bits, but we're also going to go beyond and develop, Michael, to your point, these value-added services that actually we can monetize on beyond the regulatory minimum compliance. And those became like we have premium APIs. And again, we're seeing a lot of value for especially corporate customer space using premium APIs. And we see the same trajectory happening even with the retail digital euro now. So again, there's going to be a lot of while the segment is not going to be corporate for the digital euro, we still see the trajectory of new types of services coming forward beyond the mandatory regulatory compliance. This understanding that APIs are going to happen was very important for us to choose our strategy. And now we're really working on moving beyond open banking into what we call embedded finance or embedded banking, where especially now with the future of agentic AI flows, we need to find a way how do the agents work with our banking services, and that becomes part of our open banking journey as well. Final point on that, one of the reasons why the Nordics was able to move forward quickly with the open banking, and especially beyond PSD2, is because we had and still have a very strong digital identity or EID infrastructure in the Nordics. In many countries where you just have the API, but you don't have a EID infrastructure, that initiation becomes more complicated because there's no standardization on that level. But we already had that in the Nordics in different shapes and forms in different countries, but still, and that became a critical element in its success. Now, to conclude on this point, now that we see the EU digital identity space happening, so we're finding a new way, a new next generation way to digitize people's identities and use this kind of a verified credential approach, even for corporates on that space. We're going to see a next leap now in the open banking space as well. And
if I could dig into that, because I think it definitely is one of the big success stories also for self-regulation, that you had all these bank IDs in the Nordics there, that you just did it with no regulator ever asking for it, really. But then there is also, I think, that one case where then one like Vips wants to access the Swedish bank ID, and then discussions around that. Is there room for more cooperation between these various bank IDs in different countries, or will this all now be resolved as part of the OID wallet thing coming up?
There's always space for more collaboration, but it's very slow, and finding the incentives is difficult. But now again, this kind of almost like public sector interference here coming through the EU DI. That's again, it's going to become table stakes. So then we have to, once we can establish that we will have this interoperable identity infrastructure, we can move on to other things as well. It's actually one interesting point to make here is that there's a very common belief that, especially here in the Nordics, where their digital identity is being provided mostly by banks, that this would be some kind of a fantastic money-making business for the banks. Quite the contrary. If there's a way that we can find a way to do this cost efficiently outside, I think that would happen for every bank. It's not a profit-making opportunity or anything like that for the banks, but the reasons are actually cost-related from a perspective that, because we have to ensure the identity and we have to assume the liability of identifying the customer, the only way you can do that in a legally sustainable way is to do it by yourself. And that's why we kind of assume the responsibility and seeing how can we then also make it usable outside. But if there would be a legal and very clearly liability defined way to do it outside, it would definitely happen. And I think the EU DI is heading towards the direction, even though there's a lot of unanswered questions, especially on the liability side there as well.
Fantastic. I think we've covered a lot of ground with you, Ville. So unless anybody has any last...
I do, okay. Because I think we can't talk about the Nordics without talking about P27. And sorry for that.
No.
I think I have to put my finger into that. So I think it was one of the most ambitious projects that Europe has ever attempted, and run by, the most collaborative banks and advanced banks in Europe and all that. And then it still collapsed after failed license applications. And I think reported basically, was it 700 million euros spent. And now now you are actually, or with VIPs, I mean, it's maybe related. I know if it is related, but now as a follow-on to that, it's more about collaboration between like EPI, Vero, and VIPs, but also the other ones like Bitham, etc. So this Vero Europa alliance, which is looming. So. Well, why do you think this will work out better than the P27? Or what went wrong there, and what can EPI and Vero learn from, or your new Europa alliance there learn from all that?
Well, there's difficult to say what they can learn from P27. I mean, there's a lot of factors that went into the failure of P27. Number one being that it's, going back to my original point, it's very difficult to find shared financial incentives or this kind of a collaborative space between competitors. And that's why the old joke goes that if you put two banks in the room, they will not be able to agree on the color of the wall because, again, it's very difficult to agree on anything between banks, let alone if you're talking about multiple banks, like in case of P27. But that's one of the problems. And again, because being competitors and then trying to find a collaborative space that will be also in line with the antitrust regulations of the European Union and all the nationalities represented in those consortiums, it becomes extremely slow and difficult to work together. And then you start to see different kinds of symptoms of that. And then ultimately, many things fall apart. Not only P27, there's a very, very, very long list of different kinds of collaborations in Europe and otherwise that have failed for similar kinds of themes. They are not the same, but they rhyme many times. So what can we see? If P27 failed, then what can Europe-PA do together? Well, I think it's actually changing circumstances. I'm still coming back to my point about the digital euro. Now, the digital euro is taking the acceptance off the table, basically saying that it's solved. So now the Europe-PA can focus on connecting national and regional solutions together, and then finding this way to replicate what the digital euro is doing between the private sector solutions. So they need to lift up the game and make understanding that this is a commodity table stakes thing to work together. And that's why Europe-PA now is in a completely different space from an incentive perspective. So I think that's the critical piece. When it comes to execution, there's different ways on how to execute on the interoperability. Many of that have been discussed even in this podcast before, so no need to replicate those. But I think those questions will settle now that the digital euro is kind of looming in the horizon.
But Ville, I admire in any case the bravery in recognizing a failure and not sticking stubbornly to the idea and throwing money out, good money after bad money, and stopping the what was a problem. That's precisely what I see with digital euro. We are piling billions of euros in a mountain that will give birth to a mouse. But we'll see.
On that happy note, any more urgent questions? I mean, I love the point about the P27 and the Vero and the Euro-PA, but I think in the interest of our listeners, maybe we should gradually draw to a close. So I thought that was a fantastic episode. So thank you so much, Ville, for being so punchy and having some very new ideas. I mean, digital euro, that we should just accept it's happening and make the best of it. On blockchain, that it's been super to actually get new business models going, get banks working together, thinking about new things, but maybe then for the operational, for scaling it and for making it happen, maybe you need to go back to sort of other systems. We've talked about what the learning is from P27, the EID, open banking. I think we've covered a lot of things, and I've certainly learned a lot of things, and I hope everybody who's listening to this enjoyed it as much as we did. So thank you very much, Ville, and Javier and Ralph. Javier, you sound like you want to say something.
Yes, just to thank Ville for this very, very truly engaging chat. It has triggered in me many further ideas. So thank you very much, Ville.
It was my pleasure.
Thank you.
Thank you. That's the point. That's we all learn, because none of us have the answers to everything, and that we all get smarter by talking to each other. Okay, thank you to all here, and thanks to all watching, and see you next time.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.